So here's a company I absolutely despise. In fact, I don't know many people who have had a good long-term experience using PayPal. It's expensive, it's even more expensive, and guess what? It's even more expensive than that. Their customer service is an absolute joke, and it's impossible to get refunds. So how is PayPal still around after all these years? In fact, how is PayPal dominating the market? And the biggest question of all, is PayPal a good investment right now and coming into 2021? Well, the only way to do that is to quite simply get on the phone, call PayPal up and just go, look, you guys are getting an STI. So let's finish this god-awful year that was 2020 with a bang by make sure you have subscribed, turn on the bell, and more importantly, smash that like button. If you want to support the channel, check out the Patreon links in the description. You can buy me a whiskey, a beer, get access to the chat room, and see my portfolio every single week and as I adjust it for buys and sells. If you want to go one step further, the pinned comment down in the comment section is a link to eToro. If you are not from the US or Canada, you can simply sign up, deposit, make one simple trade, and get free lifetime access to said chat room. So you're all here because of PayPal. Now, PayPal, it's wronged all of us, right? At some point, PayPal has definitely wronged us. From overcharging to not refunding. It's an absolute joke of a company. But it's continually capitalizing more and more in that space. In fact, PayPal long-term will continue to do well, and I'm going to tell you why in this video. But full disclosure, I do not hold any PayPal shares, and I do not intend to buy any. Also, I'll tell you why in the video. Now, for those of you who are older than the millennial, you may not know what PayPal is. The easiest way to put it is a very expensive online bank that is the middleman between buyers and sellers. It charges a hell of a lot of money and more importantly makes a lot of money, and that's the layman's terms of what it does. It has a lot of pros and a damn lot of cons, but that's in layman's terms what it is. Now let's have a look at PayPal's fundamentals. PayPal's current market cap is riding around the 280 billion market cap, billion US dollars. That's 280 billion US dollars. Crazy market cap. And if we go on Simply Wall Street, their algorithm thinks that PayPal is currently 40% overvalued if you compare it to all the other finance and fintech and online tech stocks. And I sort of agree with them and I sort of don't, because quite simply put, they're comparing this to also a lot of banks, which are just quite simply dog shit. Let's just say that. They're not that good as an investment. 99% of banks will probably not be around in 10 years. I might have exaggerated there, but you know what I'm saying. Banks are gonna struggle with this whole new Revolut finance, download an app, you've got a bank account revolution. The old days of walking into a bank are nearly dead in themselves, and a lot of banks, you know, your Lloyds, your HSBCs, your, I don't know any US banks off the top of my head, and Standard and Chartered, are not going to be around that much longer unless they adapt to the new millennial Gen Z revolution that is going on, which is another reason why PayPal are actually capitalizing. They're moving into that space, but let's continue with the fundamentals just for now. So PayPal is profitable, but they have a very high PE ratio and a PEG ratio. If you don't know what a PE and a PEG ratio is, I strongly suggest you check out the video on my channel that I did on PE and PEGs. But basically, the closer to 1, the better it is. Now their PE, their price to earnings ratio, is currently 89. Yeah, close to 1's better. Their PEG ratio is not so good either. It's currently 5, which is also considered quite high, and the closer to 1 again is better. Now their assets and liabilities are actually not too bad. If we go in their short-term assets, they've currently got 48 billion in short-term assets with a 35 billion in liabilities, so massively covered there. Long-term, they've got 16 billion and 11 billion, so also covered there as well. And if we go into their debt to equity ratio, they've currently got 48% debt to equity, which is considered quite good as well, to be honest. Now, the one thing I don't get with PayPal is it's been around for donkey's years and they still don't pay a dividend. If they paid a dividend, I think they would do much, much better with as far as long-term investors go rather than your speculative growth investors. But that's just my personal opinion. I'd love to see PayPal pay a dividend and I'd consider actually having some. Now, there has been some insider selling from independent directors, but nothing too much to affect the stock price. So let's just move on from the fundamentals. Now, as far as the chart goes, it is up over 100% in the last 12 months. Which you can sort of expect given the fact that everyone's sort of locked down at home buying online. eBay, Amazon, all these companies are doing very, very well and online sales are up, and more importantly, that sector is very, very hot. E-commerce is going to be huge and continue to be huge for decades to come, and PayPal is one of the biggest players in that space. So no wonder PayPal did 100% this year. In fact, I'm shocked it's only 100%, to be honest, given the fact that Tesla's up as much as it is, given the fact that, you know, you've got Airbnb stock IPOing at crazy numbers as well. I think that this stock could have actually done a lot better, to be honest. The biggest news that happened with PayPal really in recent terms was the fact that they're starting to accept cryptocurrency on their platform. They accept Bitcoin, which is crazy because a lot of people are buying Bitcoin and Bitcoin prices continue to make new all-time highs. But the hype around Bitcoin will also rub off onto companies that accept it, like PayPal. That's the reason why we had the recent spike. Now, their revenues at PayPal are growing year on year and continue to grow at an exponential rate. Now, that said, next year, I think that could slow down, to be honest, because if the world does start moving again, I can see that we've probably skipped 3 years ahead on e-commerce, to be honest. And I do expect maybe a stagnation or a slowdown in e-commerce once the world starts moving and people do actually start going into shops again, you know, crazy as that may sound. Now, there is something that is good and bad at the same time, and that is the sort of institutional ownership of PayPal. And what I mean by that is 80+% of PayPal shares that are currently on the market are owned by institutional investors, funds, banks, etc. Companies, 80% are owned by institutions. So actually only 20% or even less than that are traded by retail investors, which are me and you. That's a retail investor. So we can't really impact the share price that much, but institutional investors can. And the fact that so many companies who have got millions and millions and billions of dollars on the line are paying people to research this company and buying it is a good sign long term, right? Yes, until they start selling. And we've seen that with VW. When there's a panic, people tend to pull out and it's a rat race to the bottom. And if that does happen, I'm not saying it will with PayPal. In fact, I don't think it will in the short term. But if it ever did, you could see a rat race to the bottom and it could be very, very bloody for me and you, to be honest. So that's just something to be aware of. Look at Wirecard. It's a good example. One negative news, and it was very negative news, very bad news in fact, but institutional investors pulled out and that went down way, way too fast for what a normal company would have traded at if it was just retail owned instead of institutionally owned. Now, Cathie Wood, again, in the previous video, I talked about Cathie Wood and ARK Invest. They are actively buying PayPal, which is a good sign as well. But that sort of comes back to what I've just said about institutional ownership. Cathie Wood said, buy all the dips on PayPal. It will continue to do well. And I completely agree with her. I don't have any bad feelings about anyone having PayPal in their portfolio long term. But for me, I just can't pull the trigger on it, to be honest. I really can't because I despise the company. I've never had a good experience with it. And I think that if another company came with a product that is as reliable as PayPal's, they could lose a lot of market share fast. And I think that day might not be too far away, to be honest. But that said, if PayPal did fall 30% tomorrow, I probably would take a share piece in it, to be honest. I don't see that happening, by the way, but we sort of had this channel on the chart that it recently broke out of. Now, if it did come to the bottom of that channel, I probably would look at picking up some shares. And I do think PayPal is a good long-term investment. I just, I'm a value investor. I don't buy highs, I buy big dips. And for me, I think that there's better, when I make an investment, I want to make 3-4x my money, potentially in 5 years, okay? PayPal could do that, but again, if it fell 30%, I'd feel a lot more comfortable buying in, to be honest. And the fact that they don't give a dividend means that I just genuinely can't bring myself to buy the highs. So is PayPal a good investment? Is it the best value it's ever going to be right now? Or do you even currently hold PayPal? If you do hold it, let me know what price in the comments. And that's it from me. Please make sure that like button is destroyed and turned blue. And have a great end to 2020. And I hope 2021 brings us all a lot more money, but more importantly, a much better lifestyle. Take care. Peace.